Hey everybody, this is Juan Jaramillo with Empower Homes, team lead, realtor for the last 6 years. I've had the pleasure to serve about 100 homes, 100 clients in the last 3 years or so. And today I wanted to talk to you guys about everything pre-approvals. One thing to keep in mind, I'm not a lender. I don't know everything about the business, obviously, but I do know a good bit, and I wanted to share everything I do know about pre-approval specifically because I think that's something I've seen a lot of agents have confusion about or have kind of let's say lack of knowledge on pre-approval. So I wanted to go ahead and start having that conversation with you guys. So what are we talking about today? We're going to talk about what is the purpose of pre-approvals, when you should advise your client to get a pre-approval, and the three different types of pre-approvals and when each one makes sense and what situation each one makes sense. All right, let's get this party started. So purpose of a pre-approval. There's several purposes, obviously, but we're going to start with, will the bank loan you money to begin with, or loan your client anything to begin with? Obviously, that's why sellers require, for the most part, a pre-approval, some kind of confidence that you can afford what you want to buy, that you can afford the offer that you're presenting to the seller. How much the bank is willing to loan your client, right? I think that's a big one. That's why as agents, especially seasoned agents, we most of the time, and there's caveats, like anything real estate, but for the most part, we require our clients to have a pre-approval on hand before we even start looking at homes, right? And also, it helps us create a better search for people because we then know what their maximum price is, right? What else does it do? What else is the purpose of a pre-approval? What will closing costs be? I think this is a huge one, and especially one because right now and I'm just giving you guys generalities, so please check everything I say, take everything I say with a grain of salt. But in general, closing costs will run you around 2.5 to 3.5% of the purchase price. However, 2.5 to 3.5 is actually a pretty big difference. It's a pretty big deal. And so, go ahead and getting a pre-approval, but also taking it one step further. Go ahead and ask the lender what the cash to close is, or what the closing cost is going to be, so that your client is aware of that, and so your client has enough money. Especially more importantly, with clients that don't have an infinite amount of money supply to buy a home. What is the rough estimate for their mortgage and down payment? It's another big reason why you want to go ahead and speak with the lender. I would actually also use these for as objection handlers when somebody pushes back and wants to see a home before seeing a pre-approval, or more in general want to start seeing homes, not just one specific home, before the pre-approval. I want to go ahead and let them know, hey, we want to know what your mortgage is. We want to know what your down payment is, because one thing, especially in interest rates right now in 2025, early 2025, at 7% interest rate, I'm I had a client that was quoted $1,900 a month for a home at 250. I don't think he was expecting that. And I don't think a lot of people expect that, especially when you have a low down payment. I don't think a lot of people expect that your mortgage is going to be that high for a purchase price like that because they have what's called recency bias. They remember the days, the good old days, when interest rates were at 2 or 3%, and 250 could have been, I mean, I don't remember, maybe 13 and $1,400 a mortgage. So that's a huge difference. So let's go ahead and get that conversation out of the way before we even find the perfect home. And some showings require a pre-approval. Very few, but there are some sellers that require buyers to come in, and they'll say it in the MLS and the MLS remarks. Please present the pre-approval before you schedule showings. So for all those reasons, that is the purpose of a pre-approval. All right. When does a pre-approval make sense? Almost always when your client answers this question. I like to ask this question. I should do a better job of asking it more often, but the question is, if the right home came up tomorrow, would you be interested in seeing it? If the answer is yes, is yeah, they should probably go ahead and get a pre-approval, right? Now, we're watching this video to have a little bit more nuance, so obviously we're going to give you a little bit more nuance, right? And the topic. So here's the three scenarios, the three different the three different scenarios to consider. One is low motivated buyers. Those buyers are probably going to be the have the most pushback to get pre-approval. So I would again use the objections back to the purposes of a pre-approval, letting them know what the purpose is, and just keep it in their back pocket. One of the things I do, because I know pre-approvals do expire usually 3 months, is I'll go ahead and let them know, hey, let's go ahead and get a pre-approval now. And if you don't buy anything in 3 months, I'm not going to ask you to get a pre-approval again every 3 months or so. We'll just keep looking, but we'll have the confidence as long as your financial picture hasn't changed. We'll have the confidence that we'll have a rough estimate of what you can get pre-approved for. So whenever the right one does come up, we can go ahead and move on it quick, get that pre-approval quickly again with the lender that already has most of the financial picture, anyways. Right? Maybe just a couple updated things like pay stubs and bank statements. You have your determined buyers. What needs to happen? Oh, what needs to happen to be ready? So these are buyers that maybe can't qualify yet, but they're ready to do what it takes. They're ready to start this journey to buying a home. And so with them, I also go ahead and advise them to go ahead and speak with the lender and see if it's essentially the similar process of getting pre-approved, except maybe they're not sent a letter of pre-approval yet, right? Because most of the time, what the bank will do, what the lender will do, is go ahead and get their application in, they'll go ahead and pull credit and go ahead and check their incomes, and they'll tell you, okay, you need to pay off this debt, you need to pay off that debt. Maybe we need to get your credit score up 20 points, and all that. If you do the right things, we'll be able to get you pre-approved for 300 in 6 months. Or let's say they're pre-approved right now for 250, but they really want a home at 300. Okay, it's not an income issue. It might be a debt to income issue, a DTI issue. So again, having that conversation early on in the process so that your client knows exactly what steps to take in order to kind of get it to the next level, or the next 300K price range. You guys get it. High motivation. These are the best people to work with. Obviously, the easiest people to work with. They have extremely high motivation. They're gonna just say, "Hey, who do you want me to speak with? I want to get that pre-approval done today." One of the things that to keep in mind, especially with agents here in Empower Homes, really everybody is, don't forget to follow up with these high motivators the very next day, either the lender or them, because they are either going to work with you or they're going to work with the next agent or the first agent to get them pre-approved. That happens a lot of times, especially if you don't add value to them up front and kind of differentiate yourself from everybody else. So something to keep in mind. But yeah, high motivators, they're going to get pre-approved extremely quickly. The only question is, I guess, to the next point is what type of pre-approval you should advise them to get. All right, there are three types of pre-approvals. First one, pre-approval, the one I used most common. Um, this one, really the caveat here is on all of these pre-approvals, the lender, as far as I know, obviously ask the lender, as far as I know, they pull credit for all of them: pre-approval, pre-qual, and under-in pre-approval. Pre-approval, the biggest difference is how they verify your income. Not all income is built equally. Not all income can be used towards affecting the DTI ratio to then be able to qualify for a larger home. I'll give you a quick, simple example. Let's say you have a client that has 40 hours of work, right? Sorry, they work 50 hours. 10 hours of that is extra time. Yeah, and it gets, paid at a 1.5 rate, 1.5 times rate. If they've only been working extra time, there's got to be, I don't know if it's extra time. Daniel, if you can put the actual word, I think it's extra time. But and Daniel's my editor. I like to call him, he's my brother, but he's doing the editing on these videos. You have a client that's worked 10 hours of extra time, maybe for the last year, but it's only been for the last year. That income will affect your DTI some, but not as much as you think. Why? Because of last year, they didn't do any extra time. Last I spoke with the lender was they have to come up with the average of the extra time of the last 2 years. So with the pre-approval, they go ahead and do that homework. They go ahead and get that all that verified up front so that we can avoid issues in the future. So this is kind of how I want you guys to differentiate pre-approval and the pre-qualification. The pre-qualification, income is partially verified. So they could have done some verification, maybe looked at some W-2s, maybe looked at some 1099. But if there's any additional income that they're trying to use for the DTI, a lot of the times they don't verify that up front. They kind of just take the word for the client. And so that can, as you can tell, that can be a little risky, right? Because that could affect your DTI, especially if your client is tight, right? If they can just barely be approved for 400K. And the last one is the underwritten pre-approval. Documents verified by the underwriter. So I don't know. This is how I explain this to um to my clients. I explain it with the following analogy. The underwriter is a judge. At the end of the day, the underwriter is going to either approve your loan or deny your loan. The lender is the attorney. He's going to organize a profile of the borrower in the best possible way for the underwriter to then approve or deny that borrower, right? And so all this, the underwritten pre-approval, and a lot of credit unions love to do this, which is why they take forever. The ones I've worked with take forever to get a pre-approval. A pre-approval is because they go ahead and send it over to the underwriter half the time, and that takes maybe 3 days to a week, depending on who you work with. So be ready for that. But and we'll go over the scenarios and where each one makes sense. But this could be a great one where because then if you get it underwritten pre-approved, the lender sends everything to the underwriter kind of gives you the green light. And a Rocket Mortgage does this a lot. That's why they used to, I don't know if they still do have this, but they used to have the $1,000 guaranteed close because they would just go ahead and send out this underwritten pre-approval. All that you have to do once you find the right home is make sure that the appraisal comes out good and make sure that the CO 100 is good. And that's about it. That's why you can go ahead and kind of close in 2 or 3 weeks sometimes with loans, because this is the part that really takes a little while. Okay. Which approvals make the most sense? Okay, guys, keep in mind this is my opinion. So, if you work with Empower Homes, let's talk. Let's have a one-on-one conversation about your client because every client is very different. So that recommendation might be a little different. But for everybody else, these are my general rule of thumbs that I follow. Obviously, talk to your lender, see what they advise, especially if it's a well-experienced lender or your team lead or somebody that's helping you. But in general, this is what I recommend. Okay, we start off with pre-approvals, pre-approvals. Almost always do I recommend them. 8 out of 10 times, maybe even 9 out of 10 times, I recommend a pre-approval. Underwritten pre-approvals. These are for your complex buyers. These are going to be for your business owners for that have several different sources of income. Maybe it's not a simple 1099, it's several 1099s plus a W-2 in there. These are going to be for people that might have extremely low credit score that you can just barely, maybe they're barely going to make it through. Maybe it's a manual underwrite, which could be a whole different discussion on its own. Um, these are going to be what's another good example for an anybody that you think is here's a couple red flags. If you speak with the client or a customer and they say, "Oh, I've spoken with many lenders, but nobody's been able to give me an approval," yeah, it's probably a good idea to go ahead and have them underwritten pre-approved to have that because even when you're under contract, you're going to lose maybe not your earnest money, but your client is going to lose your inspection costs. They're going to probably, depending on when the deal falls through, lose their title search cost, right? They're going to lose it ends up being about 1,200 minimum, 1,200 to $1,500, right? Even if they get their earnest money back. So, and then that could become a whole situation on its own. So for buyers that are a little tough to get approved and or you're a little hesitant on if they can get approved under in pre-approval every time, just go ahead and go through the heartache up front so that you can have the confidence to move forward. Oh, and actually, yeah, here's the different unique circumstances. Actually, I forgot I had this in the on the slide. So here you go. All right, and last but not least, there are certain times I don't mind a pre-qualification, especially if it's a lender that I trust. Okay, so it has to be a lender you trust that you've worked with before, and it has to be a buyer you trust and you've worked with before, specifically those that you've worked with before, or that you've maybe seen proof of funds, meaning they have the cash to buy the house, right? But maybe they want a loan. But make sure you see the cash, like in an account or something like that. Because you'll be surprised as to what people think their finances are versus what they're actually are. Like I remember I had this one customer I spoke with, and she was like, "Yeah, my credit score is 700 plus. I have good income. I have good assets. I'm good." But when I kind of did a little bit more, or actually, whenever she tried to go ahead and get a pre-approval or even just a simple pre-qualification, it came back and her credit score was sub 500. So a lot of the times, and also there's debts that people didn't know they had sometimes, or maybe they're in the report and they have to get rid of it before they can get pre-approved, right? But without that pre-approval, without pulling that credit, you just don't know. So make sure it's a strong buyer, a strong lender, somebody you've worked with specifically before, or somebody that has the assets to buy the home, no problem, and just kind of prefers to use a lender. Then at that point, I'm okay with the pre-qualification. I feel comfortable with that. But it's a very specific, excuse me. It's a very specific client that I would recommend doing a pre-qualification for. All right. Guys, well, thank you so much for viewing this video. I really appreciate it. I hope the lighting wasn't too bad, and it's a little cloudy day today. If any questions that you guys have, let me know. Go ahead and put them in the bottom, especially right now. I'll be answering all the questions. Subscribe to our channel if you want more actionable real estate trainings. That's really what we're going to be focused on is world-class trainings. Looking for a team in the upstate or brokerage, let me know. Hit me up on the DM or on the, we'll probably put something below in the comment section. And if you're not local, we work with Real Broker. It's an amazing brokerage. I'd love to have a conversation to you. If that makes sense. It doesn't make sense for everybody, but I'd love to have a conversation with you to see if that makes sense. But like as always, thank you so much for watching and hope you have a great day. Have a good one.